Welcome to today's session and thanks for joining. In these videos, I show how you can swing trade profitably in any market condition, up, down or sideways, by taking only high probability and low risk trades that have maximum forces from the market, sector, industry, fundamental, technical and even seasonality in their favor. I will revisit some trade ideas or market analysis I shared recently and review how that played out. If you stay with me, I will show some stocks getting ready to buy or short and some that you may trade on Monday. You could also trade them on Friday near the close if you could find them in real time using Q systems. You could. Index move or internal breadth, which one do you prefer to use? The presentation could also be titled, Will you buy into a mega cap bubble? The market indexes or equivalent futures or ETFs show how the overall market is doing. People tend to follow four major indexes: Dow Jones Industrials, DJI, Nasdaq 100, NDX, S&P 500, SPX, and Russell 2000 RUT. I do the same. They show what the market is doing. I tend to say that is an external view. It is useful, but it does not show what is going on inside the market. Internal health is discovered from Q breadth analytics, Q total view, Q sector industry stock breadth, Q technical breadth, etc. What do I prefer to use? Index move or breadth? That is not the right question. The proper question is how to use the index move and breadth insights together to make profitable trading decisions. When both the indexes and breadth are bullish, that is a time to buy stocks. When both the indexes and breadth are bearish, that is a time to stop buying and may even short stocks. In these situations, the external view and internal health are in sync. There are times when the indexes may show strength, but breadth shows weakness. We are in such a situation, as I will show later using Q snapshots. That situation usually results in the indexes weakening in the coming days and weeks. Will that happen next? We'll find out soon. However, the divergence between indexes and breadth is enough reason to protect profit or book profit in bullish positions. Can the breadth weakness be used to short? Yes, but not the indexes or ETFs themselves. Instead, Q helps to find the weakest pocket in the market. Currently, that is the small cap stocks, as I will show later today. You may consider shorting that weak pocket. If you short like that, you may not want to short a lot until all the indexes weaken. That has not happened yet. Eventually, the strongest pocket in a diverging market like we are now will start to come down. That will provide lucrative shorting opportunities. But that time has not come yet. Some stocks in the strongest mega caps pocket are showing relative weakness, but not enough bearish signals to short. I'm going to look for those lucrative short opportunities I'm sure you will too. Greetings. I'm Sagar Nandi, retired IT professional, swing trading stocks in the USA and global markets using only one trading system and techniques that I developed myself. You may contact me using my email IDs info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website superiorprofit.co, X handle Superior Profit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk, and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Q runs on TradeStation and Metastock platforms. It has multiple components and I will use several of them in today's session as well. Let's start with a look at the dollar index. It tends to impact the market, though the inverse correlation does not always work. In the weekly chart, dollar index created a false upside breakout at the watermark resistance level, and in the daily, after the bearish headwind appeared, which happened at jump thrust high and price extreme high, price has come down. Incidentally, the decline has come with a big move down 3, so this lucrative pattern worked once again on the bearish side. Now it is some distance away from swing high. We have a bearish indecision in the weekly. Friday's candle is bullish in shape. Combined together, they are not allowing me to short or long. I decide to stand aside. There is no preferred trading direction. Now let's look at another instrument I see regularly to find out how the overall market may be influenced. That is the mega cap index. And this is a picture of mega cap custom index I shared in the last market recap. There I showed that it had a bearish indecision in weekly, and in the daily it had some weakness signals. It was moving somewhat sideways, and this is exactly what I mentioned, that if the mega caps come down, that might give an opportunity to short QQQ. That was an if the mega caps came down, but mega caps did not come down, did they? Let's look at the mega cap custom index as of today. This week closed very bullishly. In fact, mega caps is the strongest pocket of the market. For last 5 days in a row, it went up. It is at jump high now, very high price level. It is overbought for 5 days in a row, all the days in this week, and it is at price extreme high. Thrust is not high yet, only jump is high, but it is being closer to being unsustainable, this up move. And if the mega caps, the strongest pocket of the market, turns down, that will certainly affect the market in a bearish way. Mega caps are going up. that is lifting the indexes up to a large extent, at least some of them. But how is the internal breadth? Q market breadth, invaluable in assessing internal health of market and anticipating a change in market direction. How? Using divergence and other signals. Total view index, the broadest view of the market. The percentage of stocks above 50-day moving average is flashing warning sign for a long time. Since mid-October, it is failing to go up, though the candle chart itself, the total view custom index, has gone up. And more recently, though the candle chart is going up, advanced decline is coming down, up-down volume is coming down. So bearish divergence is now appearing not only in percentage of stocks above 50-day moving average, but also in advanced decline and up-down volume. On top of that, we have confirmed Hindenburg's 2 days in a row on Thursday and Friday, the skull and crossbone signals confirmed Hindenburg's, and also we have irrational exuberance on Wednesday and also on Friday. Irrational exuberance indicated by Bango signal invented by Mr. Ian Woodward, may him rest in peace. I learned about this and several other signals that Mr. Ian Woodward used from Dr. Jeffrey. Thanks to him, I have incorporated them solidly in my trading decision making. The confirmed Hindenburgs came earlier also, and now once again 2 in a row while the market is going up. The indexes, the total view custom index also went up, and irrational exuberance. Not a time I'd like to buy. Now, if you look at the bottom, growth versus value and small cap versus large cap, this week growth went up and large cap went up. Small cap versus large cap came down, that means large cap went up. Now, large caps include mega caps as well. The question to ask is that, is it truly the large caps that went up or only mega caps went up? How do we know that? There are multiple ways of knowing that in Q. I'm going to share one in the next snapshot. This is a snapshot from Q Edge of sector industry stock advanced decline, but this is not using S&P 1500, which has small cap, mid cap, large cap all. This is using a custom setting for Q Edge, which used only S&P 500, that is large cap stocks. What about the large cap stocks this week, 5-day period? Advanced decline breadth is bearish, just need to look at the color, and the bearishness remained solidly over 2-day period and 1-day period, Friday. That shows that large caps as a group is also weak. So if I go back to the previous chart, when we see that growth is going up and apparently large cap is going up, I use the word apparent because now we know it is not really the large caps that went up. We see that from advanced decline breadth. What went up is mega cap growth. If we drill down from total view to the composites, we can find out where the Hindenburgs came from. Hindenburgs came in both Nasdaq and NYSE, and the irrational exuberance, Bango signal, came in Nasdaq. No wonder, because mega cap tech went up and the irrational exuberance was on the Nasdaq stocks. not a time I would like to buy. By the way, if you look back, once the 3-month new high low hit the upper extreme, once again it pulled back. Works like a clockwork. Again, thanks to Dr. Jeffrey, after watching whose videos I started to use it in my own trading. You can also see the clear divergence of advanced decline and up-down volume, bearish divergence, in NYSE. It is less pronounced in Nasdaq because mega cap techs are rallying, but it is very clear in NYSE. Now let's look at the major indexes one by one. Internal health check. The 3-month new high low for Dow Jones Industrials came down after hitting the extreme overbought region. Works like a clockwork. We would stop buying at this point, as I mentioned in the market recap at that time. If we look at the candle chart, Dow Jones Industrials went up, but advanced decline, up down volume, showing very clear bearish divergence. Nasdaq 100, this is heavily influenced by mega cap techs. So here the 3-month new high low has not come down so much, but even here we can see some bearish divergence in advanced decline up down volume. We would expect less bearish divergence here because Nasdaq 100 is heavily influenced by mega cap tech, but I will show all the other major indexes, and we saw NYSE also bearish divergence is very pronounced. This is Russell 2000. After hitting extreme overbought level, 3-month new high low pulled back, works like a clockwork. Candle chart went up, but advanced decline up down volume, they are showing clear bearish divergence. Same thing in S&P 1500, 3-month new high low pulled back after hitting the extreme overbought level. Candle chart went up, advanced decline up down volume, showing very clear and pronounced bearish divergence. S&P 500, large cap stocks, 3-month new high low, works like a clockwork, pulled back after hitting extreme overbought level. Candle chart is going up, advanced decline up down volume showing clear and very pronounced bearish divergence. All these are telling us to avoid buying. Only mega caps seem to be going up. That was internal view. Let's look at the market ETFs to find out the external view. You could look at the futures or indexes also. I do look at them for saving time. Here I am going to look at market ETFs only. And this is a snapshot performance finder of the 4 market ETFs weekly interval. QQQ is the best performer. No wonder, that is the one mostly influenced by mega cap tech. And then SPY less influenced because it is a broader index with 500 stocks. And Dow Jones Industrials and IWM, they are not influenced by mega caps. They actually came down. Now, if you look at the performance of the mega caps side by side with the market ETFs, see by how much percentage the 8 mega cap stocks went up. Apple, the lowest by 2.3%, to Tesla, biggest mover, by 12.7%. I would surmise that if the mega caps did not go up, QQQ and SPY would also be comfortably down, and DIA and IWM might be down further. it seems very much so that the only eight stocks in the USA market, which has thousands and thousands of stocks, only these eight stocks seem to be holding up the market. That is very, very narrow breadth, and that is not a time I'd like to buy. Let's look at the market ETFs themselves. QQQ, very bullish in weekly. It is the best performer. Very bullish in daily and overbought as well. Most influenced by mega caps. No surprise there. SPY also hugely influenced by mega caps. Bullish in weekly, bearish in decision in daily. By the way, both QQQ and SPY made a new all-time high on Friday also on a closing basis. Notice the difference between QQQ and SPY though. QQQ more influenced by mega caps. If I go back, both daily and weekly for QQQ are bullish in color and shape. But if I visit SPY again, weekly is bullish, daily is not bullish in color, and on top of that it has a bearish indecision. So QQQ is strongest, SPY less so. None of them are bearish, both of them are overbought. Dia is very different. Here the weekly is neutral, has a bear release signal, underperforming the market. In the daily, the bearish headwind once again, almost miraculously, caught the very top. After that, we had a bear release signal, and on Friday, the candle color in daily has turned bearish. That is much weaker than QQQ and SPY. However, there is a trend line support not very far from the closing of Friday. So I'm less willing to short Dia now. Dia came down for the week, not influenced by mega caps as it is not market cap weighted. IWM has no mega caps, also underperformed the market, came down this week with a bear release signal. In the daily, it created the false upside breakout. I tweeted about it several times 1 week ago, and in the last market recap, I suggested shorting IWM based on the false upside breakout. You could trade it using short call vertical, and that trade would be in a profit. It also has a trend line support, but the trend line support is some distance away from Friday's close. Thursday, Friday both has bearish color in daily. This is looking the weakest pocket in the market. My last week's analysis proposing shorting small caps or IWM was perfectly timed once again. By no means IWM was in a downtrend. Even now it is not in a downtrend, but I used the reversal signals at the top to take very low risk short positions using short call vertical that turned out to be profitable. In a market where SPY QQQ made new all-time high. That is the value of doing the breadth analysis, finding the strongest pocket to buy if it is not overbought, and then finding the weakest pocket to short if it is not oversold. Let's look at more breadth analytics, bucket analysis and sector industry stock breadth using Q Edge helps to decide preferred trading direction that may be different from current market trend. And you saw that from my IWM decision last week. IWM was still in an uptrend, but I had a preferred trading direction of short. That was the result of my breadth analytics. Let's look at Q Edge. And this is again a custom setting not the usual S&P 1500 that I use, and that is to illustrate one thing. What is that thing? That it really does not matter much whether we use S&P 500 or 1500 to find out the strongest sectors and the weakest sectors, and then drilling down to the industries. It is practically the same. I do use S&P 1500 more, I think 100% of time. I use only S&P 1500 because that has a nice balance of small cap, mid cap, large cap. I trade all those market cap stocks. If you traded only S&P 500 stocks, it would make sense to use this custom setting with S&P 1500 stocks only. But myself and most traders, if not all I know, they trade all market cap stocks, small, mid, large cap. They trade liquid stocks, but all market cap stocks. And for that, I believe S&P 1500 is the right choice. But still, today I wanted to show you that the difference is not there for practical purposes. Whether I use S&P 500, the custom setting here, or S&P 1500. Notice here, on Friday, stock industry sector, all of them are bearish, about 60% around that. I'll compare that later with S&P 1500. Notice that percentage of stocks below mid Bollinger Band increased slightly from Thursday to Friday by about 2%. Also notice the percentage of stocks below lower Bollinger Band went up slightly. Percentage of stocks above upper Bollinger Band went up slightly. The overbought stocks became bit more overbought, influenced by the mega caps, some of them, and many stocks are actually coming down. We can see that. And now I'm going to switch to the USA, the usual setting for Q edge, and you notice the same picture practically. Sector industry stock bread bearish, percentage of stocks above or below rather, below mid Bollinger Band went up slightly. Percentage of stocks below lower Bollinger Band went up. Percentage of stocks above upper Bollinger Band went up. Both of the pictures are practically the same as far as deciding which pocket to trade for buying and selling. If we look at the sector industry stock bread, then again this is using S&P 1500, the usual USA setting is practically the same as using S&P 500. Longer term 1 month view overall bullish, longer term 10-day view also overall bullish, but this week is clearly bearish, 5-day period, and the bearishness is continuing into 2-day and 1-day periods. Allows shorting, does not allow buying. Technical breadth. This is invaluable in deciding preferred trading direction from breadth charts and then find unambiguous technical setups for individual stocks. Weekly technical breadth. All setups clearly bearish, strength setups bearish, trend continuation bearish, trend reversal bearish, headwind has bearish alert. Remember, in one of the recent market recaps, I showed that the weekly technical breadth was flip-flopping, bullish, bearish, and then I surmised that it would turn bearish again. I surmised that when it was very bullish, cyan color all around, and next week after that had a holiday shortened week. It became bearish but not a lot bearish, and now the flip-flop has continued. Now it is not a holiday shortened week, it has practically completed the flip-flop, and I could anticipate that based on the flip-flop that was going on, that bullishness would turn into bearishness. And when I see flip-flop like that of technical breadth at market all-time high, that is a concern. That is a concern that market may fall down. We'll see whether that will happen or not. Some stocks are already rolling over. I'll show that later. You already know that, but we'll probably try to find some trading opportunities today and see if they are already rolling over or not. So weekly technical breadth is bearish, does not allow buying, allows shorting, and daily technical breadth on Friday, all setups bearish, strength setups bearish, trend continuation slightly bullish, and reversal bearish. Overall bearish allows shorting, does not allow buying. Market level summary then, and this is the important decision point for my trading. I look at the market analytics. So far I have not looked at individual sectors, individual industries, individual stocks, individual charts. I completed the market level analysis, and this is my important conclusion for my own trading. The market is overbought and is not bullish except for mega caps. There are too many weakness signals, bearish divergences of advanced decline and up down volume, technical breadth, Hindenburg, Bango, etc. to continue buying. Small caps are possible short candidates as that pocket is the weakest. If highly overvalued mega cap tech stock starts to reverse, it will someday. They will give lucrative shorting opportunities. Review of last week's trade ideas. In the last market recap, I shared two possible trade ideas with some conditions. One was BG, a buy opportunity provided something happened. That did not happen. I will show that. The stock came down by 6.4%. That is showing the internal weakness of the market. It was not a buy setup. I did not buy it as I mentioned in the last market recap. As of last Friday, I did not buy it. During the week, I will show the chart. One condition that was required for buying did not happen, so I didn't buy. I shared a short idea, MCB, slightly went up. If you shorted the stock, it did not hit the target, did not hit the stop, so one could or would still be in the trend. Now let's look at these two charts. BG, that was a consumer staple stocks. I shared the idea on this day, Friday, 1 week ago. The weekly candle was here, and I mentioned that if it broke out of the trend line resistances, they work very well. So I am not going to, I would never try to buy before trend line break happens when price is so close to trend line resistance. So that was what I mentioned in the last market recap. If it could break out of the trend line resistance, I would have bought with a narrow stop loss, but it did not break out, fell sharply. One would not trade it using Q techniques. MCB, the shorting candidate I shared at the top, I shared it based on this candle, which created false upside breakout, had a bearish headwind, indecision cluster, and from Friday's closing price, it did not go down much, did not go up much. If you shorted it, it did not hit the target, did not hit the stop. I actually traded it on Monday when it initially went up. So I had a nice fill price I saw that the market was still going up and the stock was not coming down. So I closed the trade during the week. I did not make a profit, almost at break even, very small profit, practically break even. I did trade this, but closed the trade without profit, without loss. This week's trade idea. This is a at a glance chart, weekly, daily, of a stock. Notice what the stock is doing. In weekly, it created very effective false upside breakout. And notice this is the same pattern I used in MCB to select it as a short candidate last week. This is the same pattern I used in IWM to explain my bearish view last week. Works very well. Works very well when it is a 360-degree setup, not just technical setup. So in weekly, this chart created a false upside breakout, has trendline resistance, no nearby support. In weekly, it is falling sharply. It is in stark contrast to what we saw in mega caps, and that is a picture you will find common in many stocks today. What is shown by QQQ, what is shown by SPY, what is shown by mega caps is not at all what is going on in many individual stocks. Not that the stocks are very down, but it is not going up for a long time and now breaking down. So when I look at this stock underperforming, support is far away, I am willing to short it, and I am willing to short it also because it has a trend line resistance in daily that allows me to put the stop somewhat above the trend line resistance, or maybe above the yellow direction line that is declining now. Both the trend line resistance and yellow direction line will act as resistance. Closed right near the low of Friday, right near the low of the weekly candle. More often than not, such a pattern leads to a down move. So I would like to find short trading candidates today based on the market analysis I did earlier, and this is the kind of chart I would like to find. And I would also try a technical setup that also has weak industry and fundamental. So let me start with a list of mid-price stocks, liquid stocks. You could use all liquid stocks, you could use any other universe. Usually I go for the all liquid stocks. For today's session, I am using the mid-price liquid stocks. The mid-price stocks tend to move more than higher price stocks, and they are not as speculative as low price stocks. So that is one reason sometimes I look for mid-price stocks and look for shorting candidates or buying candidates, as the case may be today. I look for short candidates. So let me see if I can create the stock scorecard. Sometimes during the market recaps, the system is a bit slow for me, you know that already. Today it is not so slow, it is updating the data. So now we have the scorecard created, but let me do a complete top-down analysis starting with Q edge. Going to all the sectors, with one click I'm finding the sectors that are either weakest or most decelerating. That gives me 5 of the 7 sectors. That shows the market is bearish. And notice that all these sectors either remain practically unchanged or came down, not showing the bullishness at all that is visible in mega caps, QQQ and SPY to a lesser degree. Sector level is quite weak. And now I'm going to drill down into the underlying industries of these 5 sectors. With a single click, again, I'm going to find the weakest or most decelerating industries. You can see many of them are down, some are down by significant percentages. Now let me look at the stocks only in these industries from the mid-price liquid stocks. So I'm left with 243 stocks. But I'm interested in bearish setup, so let me find stocks that are down by at least 1%. Left with 128 stocks, all are down of course because I selected stocks that are down by at least 1%. Now I would like to short only weak fundamental stocks. So I'm going to click this 1-star red. That will find stocks that are either overvalued or with negative earnings growth. I'm now left with 50 stocks. Now with a single click, I'm going to look up their technical setups. Okay, let me go there. Go to the proper place and look up the technical setups of the 50 stocks. Bearish, look for setups. I'm left with only 10 stocks. That is the beauty of top-down analysis. Starting with 1000 plus stocks, I looked at weakest sectors, drill down into weakest industries, drill down into down stocks with poor fundamentals, then looked for stocks with possible trade setups. Only 10. Much easier to go through 10 charts now than to look at thousands of charts, isn't it? And what I will do, I will do it now step by step. You can see the trade setups here: breakout, flow, pullback, box, etc. Let me look at the breakouts first. Chunking, doing step by step. Open these 6 charts. You could use Metastock or you could use Q Elite on Trade Station. Let me continue with Metastock. They are tightly integrated. Trade Station Elite also tightly integrated. I could use that also. So I'm going to keep stocks that look interesting for me. Interesting means likely profitable for me. So I'll keep them and I'll remove the ones that I don't want to consider for shorting. This is MNST. You may find out the ticker symbol here. I think Monster Beverage. Breaking down. I'm looking at breakout setups, right? Breakdown. So this one I'm keeping. Next one, BEPC. It broke below one trend line support but has other supports nearby. Not going to short it. Close. Let me pin. In Metastock latest version, there is a feature to pin. So I pinned MNST. Let me look at the other stocks. PBA. Again, I'm reading the ticker symbol from here. Broke one trend line support but has direction line and trend line support nearby. Not going to short it. CNQ broke very nicely below both the supports. There is no support nearby. Possible shorting candidate. Let me keep it, pin that. BP, British Petroleum, broke support, but it is very down in the price range. Already at jump thrust low, price extreme low. That kind of down move may not be sustainable, so I'm not going to short it. So see, I'm using the setups along with the patterns to decide if it is a high probability short candidate or not, and looking at the price extreme low, jump thrust low, I would not like to short it now. I would have shorted it long time ago. So close it. CVE ticker here. Broke one trend line support, has other support nearby, not going to short. So I'm left with 2. Let's continue with the technical finder. There were few more stocks to look at. 4 more precisely. So let me open those 4 stocks. The other 2 that I shortlisted so far are already pinned. Now I'm going to look at 4 more. ENB, very high in the price level, has trend line support nearby, not going to short. AGRO, nicely broke support, has a trend line resistance nearby. I'd like to pin that for further review. FTI, reversed at the top after displaying bearish headwind and bear release, but has trend line support nearby. Don't want to short that. Close that. And LBRT, though it has bearish flow, has trend line support nearby. Don't want to short. Close that. So I'm left with 3 stocks, starting with 1000 plus stocks. What are these? They have some kind of short setup. They are weak fundamental stocks. They are in weak industries. Now let's look at them using weekly daily. MNST CNQ AGRO. Okay. Let's look at them one by one. CNQ. Now I'm looking at them using weekly daily. I could use Metastock also. Okay. Now I see the weekly has congestion area, so I'm not going to short it. Delete. Look at MNST. This is a possible shorting candidate. Weekly has a nice breakdown, daily has a nice breakdown. Only thing to note is the swing high is some distance away. So I cannot put stop so far away. I'll have to probably use intraday charts to enter it precisely, or I'll have to use some improvisation by putting stop if price can close above the declining fanning out moving averages, the direction lines. But that is not what I'd like to do. So MNST is a clear breakdown, but let's look at the last stock. We are left with AGRO. This one is falling sharply, and here I have a trend line resistance, so I can place the support just above it. So this is my final selection from technical analysis. Now is the time to go back and look at its one page stock scorecard, AGRO. While it is retrieving the data, let me go back to the slide. This is the chart I shared, isn't it? This is AGRO. This is the kind of stock I'd like to short in the kind of market we have now. And I describe exactly how we could find this stock either near the close on Friday or during weekend like I did now in only a couple of minutes. There is a comment, MNST is a better candidate for short. We all trade with our own money. We are finally able to decide what to short. Both of them could be shorted probably. I personally would choose AGRO for the stop level, but of course we trade with our own money. Looking at the one page short setup or one page stock scorecard, AGRO is steadily coming down. Very negative earnings growth. Majority of stocks went down on Friday. In itself, the industry is weak. the earnings growth is very bad. And if I look at the industry scorecard now of this specific industry, packaged foods and meats, it's very decelerating and reasonably weak industry. That allows me to short. So this is not only a technical setup but a 360-degree setup, and those are the stocks I'd like to trade, whether long or short direction. If you carry out the 360 degrees analysis using Q like that, you will most likely find other trading candidates today just as you would almost every other day. Thanks a lot for joining. I look forward to seeing you in my next webinar. Have a great weekend. And as I always say, as these live examples, I am quite confident shows, there is no reason not to do that. Trade profitably. Thank you.